Hi, this is Mark Becker sharing another video about the stock market and Tesla in particular. Again, when I made my first video, Tesla's about $185. And the market's been falling like a knife, so maybe 600 and some change now. In any case, it was a buy then, it's a buy now. Just watching some videos last night on the History Channel with my wife about Milton Hershey and Bird's Eye and CW Post. These guys are all visionaries that were hemorrhaging money before they became some of the most successful business people in the world. So when you look at a common theme amongst these geniuses, it is that they stick with their vision and they eventually become wildly successful, and you can benefit off that success through the stock market. When it comes to the general stock market, look, we're falling about 1,300 points again today. The Dow hit a high about 29.5 a month ago. Now it looks like we're in the mid to high 24s. We're still significantly higher than we were before Donald Trump took office. And everyone's wondering where the bottom is. I will say about this coronavirus, I think that the panic is a little bit stupid. If you look at the worst case scenario, which is, let's say everybody in the world gets the coronavirus, and maybe 1 to 2% of those people end up dying. The vast majority of those people who are not in the workforce anyway, people who are elderly and have some potentially fatal pre-existing condition. So these are people who are likely to die in the next 5 to 10 years anyway. I understand that's sort of a morbid and cold way to look at it, but the coronavirus is not going to ruin the world economy. If you think about your own daily routine, think about all the things that you do that are basically exactly the same as you did them before the coronavirus panic. Maybe you canceled a cruise or a plane trip or some kind of a conference. But other than that, your daily routine is essentially the same, maybe with a little bit more caution. Maybe you're buying certain products that you didn't buy before. And that's the essential effect of the coronavirus. Even for the industries that are devastated the most, in reality, like cruise ships, airplanes, hotels, conferences, this is going to be temporary. People aren't going to stop traveling. They're not going to stop going to conferences, concerts, and things of that nature. So there will be an actual impact to world GDP, but it will not be long lasting, and it will not be nearly to the percentage loss that businesses are experiencing currently in the publicly traded stock market. So, is now a good time to invest in the stock market? That depends on your perspective. I would submit that if you have a 5 to 10 year horizon, yes, now would be an excellent time to invest in the stock market. So would a month from now when we were at our highs. The stock market over the course of time tends to go up. So I guess the answer to that question would be yes, it's a better time to invest than it was a month ago. Is it a better time to invest now than it will be a month from now? I don't know the answer to that question. Nobody definitively knows the answer to that question. There are some chart readers out there who are trying to figure that out. I encourage you to look at some books and websites that talk about charts and how to tell if a bottom has formed. But at some point, the bond market, which is the 10 years at like 0.4% now or something like that, the bond market is going to become oversold to the point where people are either going to have to hold cash or put it back into stocks. So, as Warren Buffett said in 2008, 2009, he called the bottom around 8,500, or he said it was a good time to invest around 8,500. The market ended up going down to 6,500, and everybody thought he was a fool. Well, now it's at 24, 25,000, and that's even after a 20% correction in the market. Okay, so think about the actual effect on real world GDP. It's nowhere near the kind of hit that some of these companies are taking. Tread cautiously. I certainly wouldn't put my entire net worth into the market today, but to use a term that a lot of investors use, to nibble incrementally as it continues to go down, I think would be prudent, provided that you can, as I always say, don't invest money that you can't afford to walk away from for 5 to 10 years, because anything can happen. But you want to be thinking about the long term, and if you're investing in the stock market anyway. And I would be extremely surprised if the Dow is not at least at this level several years from now, if not several months from now.